Welcome to the Deep Dive. We're jumping straight in today.
Let's do it.
We've got a fresh stack of insights, this time coming from a source you shared with us. It's a market and economic update from Grok Trade, even a bit on crypto. And it covers today, June 3rd, 2025. So brand new info. Let's kick off with the markets today. The big picture, according to this Grok Trade report, stocks were up. Across the board, actually.
A pretty unified move higher then, based on their numbers.
Right. And they give specifics. The SP 500, the SPY, gained 0.57%, and they highlight something technical here.
Oh, yeah. What's that?
It says it took out the last swing high from back on May 19th.
Okay, so clearing a recent peak. Chart watchers often see that as a positive sign, right? Suggests maybe more upward momentum.
Yeah, exactly. Then there's the Dow Jones, the DIA. That added 0.52% today. And this report notes the Dow pushed above its 200-day moving average.
Another technical point. Getting above that long-term average is, often seen as significant, a potential shift in the longer trend, according to this source's view.
Definitely. The NASDAQ, QQQ, also up 0.78% gain there.
Solid gains across the large caps.
But the real standout today, at least according to this report, was the Russell 2000, the IWM. It jumped 1.6%.
Wow, 1.6%. That kind of strength in small caps. Sometimes that signals more risk appetite, maybe broader confidence in the economy's direction, since they're often more sensitive to growth.
Could be. And here's where the source adds some perspective they call crazy to think about. Remember the swings we've talked about?
Vaguely, yes. Market's been jumpy.
Well, the source points out the NASDAQ. It was down over 20% from its all-time highs not that long ago.
Yeah, that was a pretty hefty correction for tech stocks.
Exactly. But now, today's move puts it less than 3% away from hitting new all-time highs.
Wow, less than 3%. That's quite a turnaround.
The source calls a recovery wild and notes, one more strong day could potentially mean new records.
That speed, bouncing back from a 20+% drop to being that close to all-time highs in what feels like a short time, that's definitely a key observation from this source today. Really highlights the potential for these rapid shifts in sentiment we've been seeing.
It really does drive home the volatility, doesn't it? And right after that point, the source adds this line, maybe connecting it. There is certainly a lot of money to be made in the markets if you know what you're doing.
Which kind of leads naturally to the next question, based on their report. Why did things move this way today? What economic factors were in play, according to Grok Trade?
Okay, so according to them, today's advance was mainly fueled by some positive economic news they saw today, June 3rd. The big one they highlighted, U.S. job openings for April.
The JOLTS data. What did it show?
They apparently rose unexpectedly, came in at 7.39 million openings.
So more jobs available than forecasts expected.
That's what the source reports, yeah. And they interpret this as a sign of robust labor demand. Suggests the job market's holding up, despite other worries they bring up.
Okay.
And they say this was key in, quote, bolstering investor confidence today.
Makes sense. A strong job market often underpins the economy, right? Suggests consumers might keep spending.
Right. Let's shift gears a bit. The report also had an update from their crypto desk. Let's see what Grok Trade saw in the crypto world today, June 3rd.
Yeah, interesting to see how they cover crypto alongside the traditional markets here. It often does its own thing, but sometimes it connects.
Well, according to this source, Bitcoin, it was pretty much flat when the stock market closed, around 4 p.m. Eastern. Their description was that Bitcoin is sort of flagging at the moment.
Flagging. So not much momentum, no clear direction today, in their view.
Seems that way. And Ethereum, ETH. The report says it looked like it was trying to break out, but then pulled back last Thursday.
Okay, so a failed attempt, maybe?
Maybe. And they get specific on the chart. They note that on a line chart of its daily closes, ETH keeps closing just below that $2,700 level.
$2,700. Sounds like that's a key level the source is watching closely on Ethereum. Like a resistance point.
Yeah, seems like it.
Breaking decisively above that and holding.
Yeah.
That would probably be seen as pretty bullish for ETH, technically, if it happened.
Right. The source says they'll be watching to see if ETH can, quote, pop above that level and hold it. But then they connect it back to Bitcoin.
Oh, yeah. How so?
They emphasize watching Bitcoin is important for Ethereum because Bitcoin tends to lead the way. So if Bitcoin starts selling off, it's likely Ethereum will follow suit.
That Bitcoin correlation. Yeah, that's a dynamic that's been pretty consistent in the crypto space, wouldn't you say? Bitcoin often sets the tone.
Absolutely. We've seen that play out time and again.
And the source actually draws a parallel here. They compare it to the stock market, noting that While there's always outliers, 80% of stocks will follow the direction of the indices.
Interesting comparison.
Yeah, they sum it up by saying it's all about probabilities.
Probabilities. That ties back nicely to having a strategy, maybe knowing what you're doing. Which brings us to another section in this Grok Trade report.
Okay.
They talk about navigating these markets, and they specifically mention their trading mentorship program.
Ah, okay. So this part seems to be their perspective on how traders can handle the kind of conditions they've been describing. Their solution, perhaps.
Pretty much. They state that navigating markets like these requires a clear, evidence-based strategy, and they position their program as providing that, calling it a no-fluff fast track.
No fluff fast track. Highlighting efficiency sounds like a practical approach.
Yeah. They list features like personalized coaching from experts boasting over 40 years of combined experience.
40 years combined. That's a lot of time looking at markets.
Definitely. And they detail the core stuff. Hands-on technical analysis, risk management, and disciplined trade setups.
So the fundamentals, really. Learning the charts, managing risk, having a plan for trades. It seems like they're presenting this as the way to address that earlier comment about needing to know what you're doing.
Makes sense. They also mention a community aspect. Join our results-driven community. And they highlight value, saying it's at a fraction of the cost of big brand programs with support until you recoup your investment.
That community part can be helpful for traders, sharing ideas, getting support, and that promise about support until you recoup your investment. That's quite a specific commitment from the source about their program's outcome. Seems they're laying out their path to building confidence no matter what the market's doing.